and welcome to episode 98 of Money, the investing economics show for millennials by a millennial, where our goal is to educate, entertain, and increase the financial literacy of a whole new generation of investors. I'm, of course, the host of this show, MC Mo. Now, let's get to the money. Now, as is probably the case for most of you, I am getting pretty tired of talking about Trump. I don't like talking about politics, but his constant attacks and threats towards the Federal Reserve have been possibly his most brazen attempt to destroy what had been a long political norm, the independence of the Federal Reserve, which has long been considered sacred, and now Trump is trying to publicly exert heavy influence on the institution, and recently he's been doing it constantly. So this week we are going to discuss the importance of the Federal Reserve's independence. Now, to learn about the Federal Reserve, you can just watch episode 24, 25, 38, 57, 85. I've talked about them a lot because they're so influential. A brief history: the Federal Reserve was created in 1913 after a few turbulent economic years in order to enact monetary policy and bring stability to the economy and prevent the previous booms and busts. It's divided into 12 regions. The Federal Open Market Committee, who manages the money supply and the federal funds rate, is made up of 7 Board of Governors who are elected for 14-year terms by the President and approved by Congress. And that is pretty much where the dependence on Congress and the President ends. However, the Fed chair is still required to testify before Congress, and they submit a monetary report to Congress twice a year. After that, the Federal Reserve operates entirely as an independent agency. Their decisions on monetary policy do not need to be approved by anyone, and they do not receive any funding from the government. As I've tried to teach on the show, whether it's economics or investing, it's important to focus on the long term, the big picture. The problem is when you have a re-election on the line. You don't have time to think about the long term because you're too worried about winning right now. And when you're president with a weakening economy on your hands and your political opponents are constantly attacking you for it, you're not going to think twice about giving the economy a little juice. Who won it? You want to get re-elected. Who cares if it's only kicking a can down the road, as long as it gets you another 4 years in office? That's why the independence of the Federal Reserve is so important to monetary policy and the economy, because the governors who are in charge of the Federal Reserve's mandates can focus on fulfilling those rather than worrying about pressure from politicians to accomplish certain things in the short term at the expense of the correct course of action on monetary policy for the long term. With this independence, the Federal Reserve can focus on balancing economic needs. Monetary policy does not take immediate effect. It's like dropping a dye into water. If you drop a blue dye into water, the water doesn't immediately turn blue. It takes a while for it to permeate throughout. The same is true with monetary policy. When a decision is made to either raise or cut rates, it takes months before the economic impact is noticed. You may think that the effects are immediate, and it's understandable to believe that, with the way financial media outlets and the markets react to every decision that the Fed makes and every word that the Fed says. But as I and others have said over and over, the stock market is not the economy. The studies have shown that countries with an independent central bank have fared a lot better than those countries whose economies' monetary policy are controlled by the government. Economies with independent central banks are shown to have less inflation, and with moderate levels of inflation, the Federal Reserve is able to achieve its mandate of stable prices and low employment. If our economy's monetary policy was decided by Congress, our Congress, with the constant bickering, the inability to accomplish anything, the partisan sabotage, and everything else that goes on, our economy would be in constant shambles. The independence of our Federal Reserve allows them to be above all that. It removes the need for these victories to show off to constituents. It allows them to look at the data the economy provides them and allows them to make decisions based on what would be best for the country's economy as a whole, and not what would just score them political points. It's like building a house. Congress created the Federal Reserve with the Federal Reserve Act of 1913, which are like all the specs and drawings that you need to build a house. But if politicians are also on the job site complaining about the wood and the nails that are being used, it'd be a disaster. Bottom line, Trump has done a good job of deflecting all the blame for the troubles of the economy onto the Fed, instead of taking blame for his trade wars and other terrible decisions. He takes advantage of another historical popular scapegoat, but that is a story for another time. This episode is meant to demonstrate and explain why the Federal Reserve has been granted the title of independent government agency. Of course, this independence comes with shades of gray, but again, that is another story for another time. In the end, the more Trump and other politicians chip away at the independence of the Federal Reserve, the more danger the economy is put in to fall victim to the political whims of whichever party is in control of the government. And as history has shown, it's not a pretty outcome for everyone. Thank you so much for watching another episode. You can find new and classic episodes of Mo Money right here on YouTube. For now, don't forget to like, comment, subscribe, share, follow me on Twitter, follow me on Instagram, like me on Facebook. Mo Money, signing out.